this is where everybody starts to ask that question of what do I do? What should I be doing with my money? Now, the basic premise kind of stays the same no matter what you believe. At the end of the day, when inflation is an issue, that's when you want to be taking your cash and converting it to assets, because when you have inflation, that tends to benefit asset prices. Now, that doesn't mean that asset prices only go up, because asset prices can be affected by a lot of things, but over the long term, more inflation benefits asset prices and it hurts disproportionately the dollar and currency. So that's where saving money has the least benefit. Now, saving money can be beneficial for the right reasons. You just want to make sure you're saving your money the right way, because if you're saving your money for an emergency or you're saving your money to invest, that's okay, because now you have a purpose for saving your money. But if you're just saving your money because you think it's going to make you wealthy one day, well, I have news for you. Inflation is going to be eating away the value of your savings, and you're essentially guaranteed to become broker each and every day, because inflation is eating away the value of your savings. So where can you put your money? Well, the assets that I think most people are familiar with would be stocks, real estate, and even cryptocurrency. I want to talk about crypto first because of all the issues going on with crypto. We saw what happened with the Terra Luna crash, with all the issues there, that coin essentially going bankrupt, people losing millions and millions of dollars essentially overnight. So let's talk about crypto first, because yes, there's a lot of crap in crypto. I've been talking about this for a while, where anytime you have this sort of free money and just cheap dollars enter the system, you're also going to have some dumb dollars enter the system, and that can create bad coins, bad investments. Now, if you believe in the future of cryptocurrency and the future of blockchain, again, I'm not telling you what to believe or what not to believe. That's for you to decide if you believe in that or not. Then cryptocurrency can be a good investment, but you have to understand that it's going to be much more volatile than most of your traditional investments, because one is already a speculative investment. Nobody knows where cryptocurrency is going to be in the next 10 years. I mean, the stock market has been around for over a century. Real estate has been around forever, but cryptocurrency is something completely new. So that's what you have to understand, that it's going to be much more speculative, much more volatile. Now, as some of this free money goes away, as the tide starts to go out, that could cause more coins to go bust. That could cause more volatility in the cryptocurrency market. And if you're not willing to withstand that, then crypto is not a good investment for you. If you're not willing to go through whatever might come with craziness, if you can't risk seeing your money lose a lot of its value in crypto, then do not invest your money in it. You do not want to be investing more than you're willing to lose in really anything, but especially in crypto. And so now, if you are interested in crypto, if you do like the idea of investing in the blockchain, if you like the idea of investing in potentially the future of the internet, that's where I invest some of my money. I understand it's a speculative part of my portfolio. It's not a massive part of my portfolio, but it is there. This is where you got to do your research and know what you're investing in. Right? I keep my investments pretty basic. I invest in Bitcoin, Ethereum, and a couple of the smaller coins, and that's it. And the way that I invest my money is to buy a little bit every single day. It's pretty simple. I don't really have a secret strategy. If I saw a massive Bitcoin crash, sure, I might come in and buy a little bit more. But other than that, I have a dollar cost average system set up where I'm buying a little bit of the cryptocurrencies that I want every single day. It's on autopilot, it's passive, and I don't really touch it. So now I don't have to worry about what's going on in the swings, and I'm not investing for the next 6 months or the next 2 years. I'm investing for the long term. Maybe it'll go nowhere. Maybe it'll go somewhere. And so I understand it's a speculative part of my portfolio, something that I believe in, but you got to decide if this is something right for you or not. And you can expect there will be more coins that will go bust in cryptocurrency. Second, if we're talking about the stock market, you have to be very honest with yourself here, because a lot of people get excited by the idea of trying to find the next hot stock. How do you find the next Amazon? How do you find the next Google? And that can be fun and it can be exciting, but it takes a lot of work. And if you're not willing to put in the work, then maybe you don't go out and try to invest in individual companies, because that requires an additional level of knowledge and an additional level of mental kind of knowledge and ability to control your emotions. Because when you go through volatile times in the economy and the markets, and you see your investment go down, you might think that your company is about to go bust, so you want to sell out at a loss. But maybe that could have been a good buying opportunity for you. And if you're not willing to read the earnings statements, you're not willing to keep up with the company, that's where your emotions can help take over the rational, strategic part of your brain. So if you're not interested in doing all of that, then maybe you can consider investing your money into an ETF. Like if you invest your money into an S&P 500 ETF, what that means is you're investing your money into an ETF, which is a basket, a group of stocks. So you're not investing in one company, you're investing in a group of companies, and the S&P 500 is a group of the biggest 500 companies in the stock market. Third, let's talk about real estate, because real estate can be a great investment. I mean, I started investing in real estate after the 2008 crash. I mean, it was a great buying point for real estate if you're an investor, but right now we are in a seller's market. where sellers still have the upper hand. Real estate prices are still growing like crazy, even though mortgage rates are going up. And this is where you have a lot of opinions. Oh, we're going to see a crash in the real estate market. Or, oh, home prices are going to continue going up because you have big corporations buying homes. So buy a home as fast as you can right now. The thing that I want you to pay attention to with real estate is the direction where the housing market is going to go is going to depend on the Fed. Because if the Fed stays true to fighting inflation and they keep rising, jacking up interest rates, well, that's going to make housing more expensive. If housing becomes more expensive, generally, you can expect that to bring the housing market down. Now, if the Fed does the opposite and they say, okay, our economy is slowing down, we need to go fight the slowing economy, and then they start cutting interest rates, that makes borrowing money cheaper. That makes getting a mortgage cheaper. Now people are going to say, yeah, maybe I couldn't have afforded that $500,000 home 6 months ago, but now because mortgage rates are going back down, maybe I can afford it. Now that brings up demand, and that generally can push home prices higher. Now, we don't know what the Fed is actually going to do. They say that they want to keep fighting inflation, which means they want to keep jacking up interest rates. But again, nobody knows for sure. If something changes in the economy, if the Fed changes their course and they do this, well, that can affect the real estate market. So if you're going to be investing in real estate, the key that you want to be looking for is what are your investment metrics. When I invest in real estate, I'm not doing as much now because I'm investing a lot more of my money into Market Briefs, which is my financial newsletter company. If you haven't seen that yet, it's a free financial newsletter. You can check it out at marketbriefs.com. But when I invest in real estate, what I look for is not home prices, not appreciation. I'm looking for one thing. I'm looking for cash flow. I look for a 7% cash on cash return on my money. So for every dollar that I invest, I want to get 7 cents back in cash flow. And that's it. I mean, if appreciation happens, if the home price goes up, that's great. It's icing on the cake. If home prices go down, it doesn't really matter because this is what I'm looking for. This is what I'm investing for. And that's it. So I make my investing decisions in real estate based off of this. Now, this is going to depend also where you are investing in real estate, because in some states like Arizona and Texas and Nevada, even California and Florida as well, especially, these states, a lot of people don't invest for cash flow. You have a lot of investors that are looking for appreciation. They're buying a property for, say, $300,000, hoping that your tenant will be able to pay off your expenses for the short term, and hopefully you'll be able to sell it for $400,000 in the near future. Thank you for watching. If you enjoyed the shorter clip from the longer videos, here's another clip that I think you'll love. And if you're interested in learning more about how to invest your money in the stock market, our team put together an amazing guide that will walk you through how to invest your money in the stock market, what the stock market is, different stock market strategies, and how to build wealth in the stock market. This guide is completely free when you sign up for our daily newsletter. So if you want to read this guide, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.